You found the perfect home in Central Florida. Price looks right, mortgage payment fits your budget, and you're ready to pull the trigger. And then you see the insurance quote and the property tax estimate, and suddenly that affordable home just got $500 to $800 more per month than you planned for. This is the number one mistake I see buyers make in Central Florida. They budget for the mortgage and completely underestimate taxes and insurance. And what's the wild part? These costs vary dramatically depending on which neighborhood you buy in. I'm Pedro with eXp Realty, and today I'm going to break down the real costs of property taxes and homeowners insurance across Central Florida most popular neighborhoods. Actual numbers, okay? No fluff. So let's get into it. If you're planning to move to Central Florida or buy a home for the first time, this video can save you thousands. So just click subscribe, hit the bell so you don't miss content like this. Now, let's get into it. All right, so let's start with property taxes because this is where most people get confused. Florida, as you should know, does not have state income tax, and that's the good news, right? But the way the state generates revenue is through property taxes and sales taxes. So your property tax bill in Florida might be higher than what you're used to in other states. But remember, you're not paying state income tax. So this often balances out, right? So here's how it works. Every county in Florida has what's called a mileage rate. That's the tax rate per $1,000 of assessed value. Your assessed value is not the same as your purchase price, and it's actually what the county property appraiser determines your home is worth. In most cases, it should be close to market value, but it differs, right? So in Orange County, for example, which covers Orlando, Lake Nona, Winter Garden, and so on and so forth, the total mileage rate typically falls between 17 and 20 mils, depending on your specific location and special taxing districts. To give you an example, Orlando, the city itself, the tax there is around 1.75 based on the price that is evaluated. Osceola County, that covers Celebration, Kissimmee, St. Cloud, that runs slightly different, and Seminole County, that covers Oviedo, Sanford, has also their own rates. In Lake County, Clermont, Mount Dora, Montverde, Mineola tends to be a little lower, and I would say the range would be between 1 and 1.2% of your assessed value. So on a $400,000 home, for example, in Orange County, you are looking at roughly $6,800 to $8,000 per year in property taxes before homestead exemption. That's $560 to $670 per month just in taxes. Look at this, before insurance, all right? Now, here's where Florida gives you a break, homestead exemption. If this is your primary residence, meaning if you live in the home, you can file for homestead exemption, which reduces your taxable value by up to $50,000. On a $400,000 home, for example, that drops if your taxable value is $350,000, which saves you roughly $850 to $1,000 per year, depending on your mileage rate. That's real money, right? But here's the part most people miss. Homestead also caps your assessed value increase at 3% per year, regardless of how much the market goes up. So if your home appreciates 10% in a year, your taxes only go up based on a 3% increase. Over time, that is going to save you a lot of money. Trust me. This is called the Save Our Homes cap, and it's one of the best tax benefits in the country for homeowners. You have to file homestead by March 1st of the year after your purchase, and please do not forget this. I've seen buyers leave thousands of dollars on the table because they weren't even interested in file on time. All right, so let's get into the numbers by neighborhood. I'm going to give you estimated annual property taxes based on median home prices in each area after, okay, after homestead exemption. These are approximations. Your actual number will depend on your specific home and assessed value. So don't quote me on the exact numbers here, all right? Lake Nona, a median price around 450 to 650,000. The estimated annual taxes after homestead, $7,000 to $10,500. Some newer communities here also have CDD fees, which I will get into in a minute. Winter Garden, medium home prices here are $400,000 to $700,000. Estimated annual taxes, you're gonna see something between $6,000 to $11,000. And again, this is Orange County, right? So mileage rates here are considered the highest in Central Florida because of Orlando. Oviedo, medium home prices range between $350,000 to $550,000. Seminole County mileage rates tend to be slightly lower. The estimated annual taxes for that bracket should be between $5,200 to $8,500. Clermont, medium home prices here, $300,000 to $500,000. Lake County generally has lower mileage rates. Estimated annual taxes range between $4,200 to $7,000. This is one of the reasons Clermont is attractive to value buyers. Celebration. The median home prices in Celebration range between $500,000 to $900,000. Osceola County, the estimated annual taxes range between $7,500 to $14,000. Plus, Celebration has its own community fees on top of this, right? Because it's a planned community. Horizon West, median home prices there range between $400,000 to $650,000. It's also in Orange County, and the estimated annual taxes for them are between $6,000 to $10,500. Many communities there have CDD fees as well. Keep that in mind. DeLand, the median home prices there range between $300,000 to $450,000 in Volusia County. The estimated annual taxes there range between $4,000 to $6,500. One of the most affordable options in Central Florida. The Berry, the median home prices there range between $280,000 to $450,000. Also in Volusia County, the estimated annual taxes there range between $3,700 to $6,500. Winter Park, median home prices there range between $800,000 to plus $1 million. It's also in Orange County, and the estimated annual taxes are $13,000 to $17,000 plus. This is a premium location, right? So you have to pay a premium tax bill. Now, as you can see, the neighborhood you choose has massive impact on your monthly payment. The difference between DeLand and Winter Park, for example, on a comparable percentage basis is significant. This is why I always tell my clients, don't just look at the purchase price, look at the total cost of ownership. Florida has the higher homeowners insurance rates in the country. I'm not going to sugarcoat it, okay? So the average annual premium in Florida is around $4,000 to $6,000, depending on the home. But in some areas, it can be significantly higher and other areas lower. Why? 3 reasons. Number 1, of course, hurricanes. Florida's exposure to tropical storms and hurricanes makes it a high-risk state for insurers. 2, if your roof is over 15 years, many carriers won't even insure you, or they will charge a massive premium. This is why new construction here in Central Florida is very attractive right now. You get a brand new roof and lower insurance. Number 3, the insurance market itself. Several carriers have left Florida in recent years, reducing competition and driving prices up. So what does this look like area by area? Generally, homes closer to the coast pay more. Homes inland like Clermont, DeLand, Oviedo tend to have slightly lower premiums. Homes in flood zones pay significantly more because you will need a separate flood insurance on top of your homeowner's policy. For a $400,000 home, for example, here in Central Florida, budget $3,500 to $5,500 per year for homeowners insurance. That should be between $290 to $460 a month. On a $600,000 home, you could be looking at a $5,000 to $7,500 a year. New construction typically gets better rates because of updated building codes, impact-resistant materials, and new roofs. If you're buying resale, ask about the roof age immediately. You will directly impact your insurance costs. You will hear a lot about Citizens Insurance here in Florida. Citizens is the state-backed insurer of last resort. If you can't find coverage in the private market, Citizens will insure you. But here's the thing, Citizens isn't always cheaper. In fact, they've been raising rates aggressively. My recommendation, always get quotes from multiple private carriers and Citizens. Work with an independent insurance agent, not a captive agent who only represents one company. Flood insurance is separate from homeowners policy. If your home is in a FEMA designated flood zone, your lender will require flood insurance. Even if you're not in a flood zone, I still recommend considering it. Florida is flat, it rains a lot, and flooding can happen anywhere. Flood insurance through the National Flood Insurance Program runs anywhere from $500 to $3,000 plus per year, depending on your zone and coverage level. Private flood insurance is also available and can sometimes be cheaper. Now, before you buy any home here in Central Florida, go on Google and check for the FEMA flood map for that specific address. This is non-negotiable, okay? All right, so this is the one that catches people off guard most of the times, and I always talk about it in every video that I make. CDD fees. CDD stands for Community Development District, and in Florida, when a developer builds a new community, they often create a CDD to finance the infrastructure. They need to do roads, utilities, parks, stormwater systems, and that debt gets passed on to the homeowner as an annual assessment on your tax bill. So, CDD fees in Central Florida typically range between $1,500 to $4,000 a year, depending on the community you're in. So some newer communities in Horizon West, Lake Nona, and Celebration, for example, have CDD fees on the higher end. And here's the key. CDD fees are an addition to your property taxes and your HOA fees. So you could be paying property taxes plus HOA plus CD. That triple stack right there can add $400 to $800 per month to your housing costs that you didn't see coming. Always ask about the CDD fees before you make an offer, okay? If the community has a CDD, get that exact annual amount and factor it into your budget. This is one of the biggest hidden costs in Central Florida real estate. Keep that in mind. Okay, so let's put this all together for you with a real example so you can see the full picture. Let's say, and you should probably see in one of my videos that this do exist, okay? So let's say you're buying a $425,000 townhome in Lake Nona. It's rare, but it exists. Just go there and check for that video. Here's what your real monthly costs would look like. Principal and interest considering 3.5% down and 4.99% rate. That rate is usually what new construction builders are offering if you buy in 2026. That should be approximately $2,200 in principal and interest. Property taxes after homestead should be around $550 a month. Homeowners insurance around $375 a month. PMI is a private mortgage insurance, and it's required up to 20% down, okay? So that's approximately $150 a month. You should also pay your HOA fees. That should be around $250 a month. And CDD fees, if they do exist, they should be approximately $200 a month for that townhome price range. So your total estimated monthly payment should be approximately $3,725 a month. And if you compare that to the mortgage calculator that told you $2,200 a month, you can see the gap, right? So that's almost $1,500 difference a month in costs that don't show up on the basic calculator. This is why I walk every single one of my clients through this exercise before they start shopping. You need to know your real number, not the fantasy number, unfortunately, right? Now, let's run the same exercise for a $350,000 home in Clermont with no CDD. Principal and interest, using the same example, 3 to 5% down, 4.99% rate. That should be approximately $1,810 a month. Property taxes after homestead in Lake County, $400 a month. Homeowners insurance, around $325. PMI of around $125 again. HOA fees, around $150 a month. So your total estimated monthly payment should be around $2,810. That's a $900 a month difference just by choosing a different neighborhood. So as I always stress, location matters, not just for lifestyle, but of course for your wallet. And last but not least, before we wrap up this video, here are 5 quick tips to lower your insurance and tax burden in Central Florida. Number 1, file for homestead exemption immediately after closing. Don't wait, otherwise you're gonna forget. The deadline is March 1st. Number 2, get new construction when possible. Newer homes get better insurance rates because of the updated building codes and new roofs. Number 3, shop insurance with an independent agent. Don't just go and get the first quote. Get always 3 or more quotes, okay? Number 4, ask about wind mitigation. If your home has hurricane shutters, impact windows, or a hip roof, you can get significant insurance discounts. Get a wind mitigation inspection and you see the benefit. Number 5, understand CDD payoff options. Some CDDs allow you to pay off the bond early, which eliminates the annual fee, okay? So ask the developer or your agent about this option and they will be gladly send that to you. All right, so that was the full breakdown. I hope you enjoyed this video. I hope this content was really helpful for your decision-making needs. And over here, we were able to break down your real cost whenever you're ready to buy your first home in Florida. If you're planning to move to Central Florida or buy your first home and want someone to back you up, feel free to call or text me. I'll be more than happy to assist you with your next steps. My phone number is 415-604-7557, or you can click on one of the links in the description below to book a strategic call with me. In that call, we can cover everything you need to know before choosing a neighborhood, a home, a community, and understand your monthly budget. Thank you so much for watching this video. My name is Pedro with eXp Realty, and I'll see you next time.